All right, everyone, here we are with ticker symbol AAPL, Apple Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back. And let's jump into this chart. So Apple had a run here. And if we zoom out, this run had formed a recovery since 104. And it reached highs here. If we zoom in and take a real close look at what was the highest peak here at 126 and some change, it was 126.59. That is an important indicator for this stock to hit newer highs. So in the near term, that is one of the highest points that the bulls were able to reach, and the bulls are going to want to cross. Super important point for the bulls. Now, this actually started to fall, and it was a very volatile day. I mean, it broke through resistance, and it held up there for about 2 hours, and quickly after, the bears broke through resistance, broke through support, leveled off, again broke through the support, and worked their way down to break through the 50-day moving average, leveling off right now at 120.99, literally 121, off by 1 cent. And right now the stock is in a sideways direction, but the 50-day moving average is above it. The 50-day moving average is 122.56. Can't land quite exactly on it, but 122.56 is the 50-day moving average. I'd write that down. That lets us know on what side of the chart we're in, and are the bears or bulls dominating the chart. As of right now, the bears have gained leverage. I'm going to have to move these new resistance levels and supports to their new locations so that we can see what is important for tomorrow. And we're going to look at the last couple hours of the day. I'm going to talk about this narrow, and then we're going to zoom in and then zoom out a little bit and look at what's also to be looked at in a broader perspective. Now, the resistance level is slightly below the 50-day moving average, and our support is the second lowest point reached in the day in this bearish run in bearish territory. So if it breaks through our support, the next support level would be slightly close to that at 119.70. That's an important indicator that this could be quickly on its way down to newer lows and newer support levels. But before getting there, obviously the bulls are going to have to break through the first support level, and that's 119.86. If that gets broken through, this will move further away from the 50-day moving average in a downward direction, and the bears are going to start to gain more leverage, control, taking away any sense of direction of a rally or momentum in an upward direction from the bulls. Now, I want to emphasize to our investors, pay close attention to how it's reacting if it breaks through 119.86 and starts to fall fairly quickly. Is it moving quickly? Is it kind of hanging out sideways? Because in this whole area here between 119 to where the 50-day moving average is currently, the bulls have a chance to go ahead and have a recovery. They can go ahead and load up on stocks and bring this one back up. That's something to keep in mind. But if 119.86 does get broken through, how quickly is this moving down to newer lows? Is it kind of hanging out sideways and the bulls could reappear and start a momentum and rally? Or also look at your 1-minute chart, 5-minute, 15-minute chart. See who's dominating the chart. Are the bears tearing it down? Are the bulls trying to level it off? Look at the inflow and outflow. But what I want to emphasize is at 119.86 being the first support level and closest one to the price right now, keep a close eye on the behavior of this stock. If it breaks through it, and how quickly is it reaching newer lows, or is it staying around it for the bulls to have a chance to pick back up? Now, on the other hand, we have our resistance level. This resistance level is so important for the bulls, but it does not mean that the bulls have gained control. The bulls don't have control until they break through the 50-day moving average of 122.56. That's one of the most important numbers for the bulls. They need to break through this. This is literally the bulls' true resistance level, but the closest resistance level in this narrow stretch is obviously 122.21. If that gets broken through, that gives us a sense of direction as investors, where this is heading, where it could possibly go and continue to go. So 122.21 is important for the bulls to break through, turn into a support, and start to break away from that and get closer to their goal of hopefully breaking through the 50-day moving average. Once they break through 122.56, then this is back in bullish territory, and the next resistance level is the highest point before this dip, and that is up here at number 124.64. I'd write that number down because once you're back in bullish territory, this is the next goal for the bulls, to break away, hit newer highs, and move further away from the 50-day moving average in an upward direction. So 124.64, important number after breaking through the 50-day moving average so that the bulls can hit newer highs and newer resistance levels. But before getting to any of those numbers, 122.21 needs to be broken through by the bulls so they can start to head in the right direction and build momentum in an upward direction to get back into bullish territory. Again, I want to emphasize to all investors, pay close attention to the behavior of this stock if it breaks through the support or how it's hanging out around 119.86, and how quickly is it going to newer lows, or is it fairly moving in a sideways direction, giving a chance for the bulls to reappear. As always, if you found this video helpful and informative, please do so and subscribe. Share this with your friends and community. Don't forget to turn on all notifications by clicking on the bell, and don't forget to hit the like button and let me know you watch this video. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I've circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlestick. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September. And the next one was on the 6th, which just happened yesterday. And it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.